Hello, my name is Rugare Gomo and I'm a high performance coach. Welcome to your business summit where we have experts ready to help you navigate your life and business during these unprecedented times. It's my great pleasure to introduce you today to Rakesh Nairn, Director of Daxcel Financial. Hi, Rakesh.
Hi, Rugare. How are you?
I'm very well, thank you. Thank you
Great.
so much for saying yes to be part of this business summit to really help our business community navigate these unprecedented times.
It's my pleasure to be here.
Now, even more importantly, you're from Zimbabwe as well, and both of us are from Zimbabwe. We've come here as international students and have now become business owners, and it's just fantastic to have the privilege of interviewing another Zimbabwean who is succeeding in the business community here in Australia.
Well, it definitely is. You don't see too many Zimbabweans that are business owners, and I suppose it is a small world, isn't it?
Absolutely. Now, can you tell me a little bit more about Daxcel Financial? Why did you create Daxcel Financial and what do you do?
I created Daxcel Financial on the back of working for many firms over the years, accounting firms, and I saw that there was a trend in the way the service was provided. Basically, a client would come in, ask for compliance work to be done, compliance being your tax returns, BASs, bookkeeping, that sort of stuff. And they pay you for the time that you put into the work. And at the end of it, you'd give them a completed tax return and likely a tax bill and your invoice. The client would go away and there was no actual value added. Whereas the clients don't pay you for that sort of work. If you can get that done as cheap as possible, where they get value from is you being the advisor to them, and that's essentially what I saw was lacking from the firms I worked in over my years as a working accountant. Starting Daxcel Financial allowed me to cater the service more to allow for more education of the business owner. So, if you teach them more about the importance of understanding their numbers, the unit metrics. So, if you spend $1, how much of that dollar goes toward your rent, your wages, overheads, all of those sort of other costs, which don't necessarily get factored into income planning. It gives you a little bit more in terms of making your decisions. You can make them a little bit more intelligently. A prime example is pricing. A lot of the time, clients would price a job based on the time it takes to do it. They don't factor in that they've got to pay for office space. They've got to pay for the cleaners that come in after hours. They've got to cover the cost of their insurances. And then at the end of the year, they're looking at their financial statements and they're like, oh, I made a loss. But why have I made a loss? The reason is you're not pricing things appropriately. The other one is they'll look at their bank account at the end of the year and they're like, you're telling me I've got to pay all of this tax, but I don't actually have the cash to show that. So getting them to understand the power behind the numbers, using those numbers to drive future decision making, and also setting goals. A lot of business owners tend not to set goals because they're so involved in the day-to-day operations of their business. They have no idea where cash is going, when debts are falling due, how much cash they have in the bank. They do this thing called, I think it's called bank account accounting, where they look in the bank account and they're like, oh, I've got $100,000 in there, I'm fine. The next thing you know, you've got a BAS that comes up, you've got employee super contributions that need to be made. You also have a tax bill that needs to be paid. You've got wages coming up. Your electricity bills are due. So before you know it, that $100,000, you're left with nothing in the bank. And so my goal with setting up Daxcel Financial was to provide business owners with the ability to understand the numbers a lot more. And we do that through one-on-one cash flow or cash management coaching, financial awareness coaching. We do catch up with some of our clients on a monthly basis where we'll review the numbers for the previous month. We'll compare those against budgeted figures. And if something's outside of an accepted variance, we'll try and understand why that variance happened. It then allows them to think more in terms of, okay, future, how are we positioned to for retirement, essentially? Because we've seen way too many people get to retirement and they've got nothing. And
I get it.
$90 a fortnight from Centrelink really doesn't cut it at times.
Mm-hmm. Well, I acknowledge you for creating this accounting firm, and I just love your business model on how you educate business owners. And part of why you're here today is you and I are part of a fantastic community called Legally Yours, led by Karen Finch, the founder and CEO of Legally Yours. And you've been providing some extraordinary updates regarding the government support for many of the lawyers who are part of that community. But the communications that you've been providing apply to any business. So today, our focus is really delving into what government support there is for business owners. But before we go into that in more detail, are you able to share some of the challenges that business owners are facing inside of the New World Order?
Sure. I think that there's a number of them. One of those is particularly around businesses that require people to actually visit their locations. So prime examples are retail, your hospitality like cafes, bars. Those sort of businesses really are going through a tough time right now. And the ones that are still operating, because they don't have that income, a lot of income coming in on a regular basis, what they're being faced with is shortages of cash flow. And that's part of the reason that earlier on, when the whole pandemic started becoming very serious, a lot of businesses made their employees either redundant or they stood them down because they had no cash to continue paying them on an ongoing basis. Some businesses would pay their employees fortnightly, weekly, or even monthly. And if you're not getting the cash coming in, you've got to find cash from somewhere to be able to fund your operating expenses. And that's the primary concern, is that they were doing what they've always done, even though business conditions had changed. So one of the challenges that's become particularly apparent is businesses are not pivoting. Or I'll give you an example. For example, a hospitality business that gets produce directly from the supplier. They obviously have moved to a model where they're providing takeaway meals, but it's still not bringing in as much revenue as when people were actually coming in and dining in. So what they've started doing is packaging the produce they get directly from the supplier and selling that directly to the public. So their revenue is, while not at the same levels it was pre-COVID-19, the revenue levels are still fairly high. And if you've got a lower overhead in terms of you're not having to keep a lot of staff on hand, and you've adjusted your other costs, you can then continue operating and still be able to make a profit.
I get it.
So that's, I think, the main issue is the cash flow shortages and not adapting to changing business conditions. So now I think would be a good time for business owners to look at their expenses. An exercise I do with a lot of clients of my own is I'll get them to run off a profit and loss statement, which you can do out of your accounting system. There's actually a standard report, you just print it off. And I get them to go through each of those accounts line by line and try and determine what costs are inside each line item. So whether it's general expenses, office expenses, some of the other things are like staff amenities, just your subscriptions is a big one. Sometimes you subscribe to something and you're paying $50 every month. And if you have 5 lots of $50 going out, that's already $250. if you've got a lot of those happening on a regular basis, that sort of adds up. Before you know it, you're already spending $10,000 more than you actually need to. So reviewing costs and also negotiating with both suppliers and customers. So if your customers are paying you 30 days from when you actually do the work, that's setting you back from a cash conversion cycle point of view. It's setting you back longer than that 30 days, because first of all, you've got to pay your suppliers. So generally you'd pay them within a 30-day period. So let me start again with that. The cash conversion cycle means that you incur a cost to deliver a service. It takes you 30 days, or say 14 days, for example, with a professional service business to deliver a service. You then invoice your client and you allow them between 14 and 30 days to pay you. So already that's a 44-day cycle that you have incurred costs, and you're not getting cash until up to 44 days later. You then have to pay your staff in between. So cash is going out quicker than it's coming in. And that's what then affects the cash flow from a different angle. So cash flow is something that's used a lot, and in many circles it's a very loosely thrown around term, but I think it's vital to the ongoing success of a business.
Very, very powerful. The two things that you mentioned there that are vital for us to understand is our cash flow, where our money is coming when we know we have to pay our liabilities. And us as business owners, the other issue is that we've been acting inside of this new world order as if nothing has happened. It's not business as usual. So it's a really challenging time for businesses who are not changing their mindset to actually review their business and how they operate, because it's then eating up the resources, their cash, and having a negative impact on their business. So inside of that, Rakesh, what are some of the government grants or financial support that is being provided to business owners to assist during these unprecedented times?
I'm glad you asked that. There's actually a lot of assistance coming through from the government, both at a state level and a federal level. I'll run through my summary that I've got here, and some of these things I'll touch on very briefly. We'll probably need a whole session to go through each of them, because because of the speed at which each of these stimulus measures was released, there is a lot involved in the back end in terms of eligibility and access, and basically needing to do XYZ before you're able to access the measures. So I'll start off with the cash that business owners will be getting. The first one is the cash flow boost, where a business can get up to $100,000 in cash credits with the tax office. So the way that will work is, if you've had an employee or employees since the 1st of January 2020, when you lodge your March 2020 BAS, depending on how much your PAYG withholding liability was, that's the income tax that you've withheld on employee wages. Depending on how much that is, you will get a credit on your BAS of up to a minimum of $20,000. The way that will work is, generally when you lodge your BAS, you've got other liabilities included in there, which are sometimes your GST, if you've got income tax installments, whereby you pay your annual tax in installments every quarter. That'll essentially sit as a liability on your BAS. And basically, when you lodge your March BAS, you'll get the first tranche of $20,000 as a credit. Say, for example, if you had GST of $5,000 and an income tax installment of $2,000, so that is
That's $7,000.
Yeah. I lost my train of thought there. Sorry. So that'll be $7,000, and then you've got a $20,000 credit. So the net difference of $13,000 will not sit with the tax office. If you've got no other existing debt, what will happen is that $13,000 amount will get paid out to you as a tax refund.
Oh, wow.
Those payments will only start happening in May. So after the 28th of April is when BAS payments will be processed. There's a 14-day timeline. So we're looking at the middle of May for when people will actually start receiving, or when business owners will start receiving those credits in their accounts.
Great.
There's a caveat there. If you have an existing ATO debt, that credit will be used to offset any payments you owe to the tax office.
Sure. So are you saying then that if I had, as you said, my income tax of, let's say, $5,000 and my GST of $2,000, then the government puts $13,000 into my bank account?
Yes.
Clear.
That's the way it'll work. That'll be, so the stimulus is delivered in 2 tranches. It's up to $100,000. So if you've, for example, your PAYG withholding liability was $2,000, you'll still get the $20,000 credit.
Sure.
If your PAYG withholding liability was $25,000, you'll get a $25,000 credit. If it was $60,000, you'll only get a $50,000 credit. And that first tranche will be either a minimum of 20 and a maximum of 50. And then the second tranche, which will be delivered as part of your June activity statement lodgement, as well as your September activity statement lodgement, that'll be delivered in equal amounts. So, and it'll be a duplicate of whatever you received in the first tranche. So if you got $20,000 in the first tranche, you'll get $20,000 split into 2 equal payments for June and September. The same if you had $50,000 in the first tranche, it'll be $25,000 in each of the June and September quarters.
Fantastic.
It gets a little bit more complicated when you look at monthly activity statement lodgements, but if you have a chat to your accountant, they'd be able to make sure that happens for you. So from a business owner's perspective, there's nothing that you need to do. You just need to make sure your BAS is lodged by the 28th of April.
Fantastic. What a great initiative from the government.
Oh, definitely. I think the idea, a lot of, initially when the stimulus was released, there was not much mention of helping employees per se, but the idea behind this cash flow boost is to keep employees employed. And that sort of leads me into the next measure, which I think hasn't been, it's been publicized way more than it should be, but rightfully so, I think. It's the JobKeeper Payment.
Yes. Tell us more about the JobKeeper. This is,
okay.
Everybody's talking about JobKeeper and trying to navigate it.
This is, there are some eligibility requirements. Basically, I'll give you a high-level overview of this because
great.
From an eligibility point of view, it'll be on a case-by-case basis that a business needs to be assessed. So my suggestion is to get in touch with your accountant if you haven't already. If you don't have an accountant, feel free to reach out. I'm more than happy to help you because there is a timeline on this payment. What it is for all eligible employees, which I'll expand on in a moment, you'll be able to get $1,500 a fortnight before tax. Eligible employees are classified as either part-time or full-time employees, or casual employees that have been with you for longer than or up to 12 months. If you've had a casual employee who's only started 9 months through the year, they wouldn't be eligible for the JobKeeper payment. So an eligible business is essentially a business that is turning over less than $1 billion. So most small businesses will fall under that category. They need to be able to get the JobKeeper stimulus payment, you need to have met a reduction in turnover test. The way that works is they'll look at your turnover in a period this year. So for example, they'll look at your turnover in March 2020 and they'll compare that against your turnover in March 2019. If there was at least a 30% reduction in turnover, you're then eligible for the JobKeeper payments.
So on this point, does there have to be a real reduction of 30%, or where we presume that I might have a reduction of 30%?
So there's two different ways of looking at it. If you don't actually if you haven't had the reduction just yet, you can then use your projected turnover. Your projected turnover is essentially forward-looking, and you're like, well, I expect to have a reduction in turnover, and therefore, on that basis, I'll be eligible. So the application process is quite involved, because first of all, you enroll. You then get your employees to fill out nomination forms, whereby they declare that they're happy for you to go ahead and claim the key payments for them. And basically, those aren't submitted to the tax office. They just need to be held on record for up to 5 years. Generally, what I found with most of my clients is they prefer that we hold onto the documentation for them, seeing as we have everything else that concerns their financial affairs. So basically, that's what we do. With the projected turnover as well, you can look at the quarter ended the 30th of June. So you project that for April, May, June, you're going to have a lower turnover than in April, May, June last year. You can use that as one of the conditions to pass the eligibility.
Brilliant.
You need to have had those employees under your employment as at the 1st of March 2020. If they were, let's say they were hired after that, they wouldn't be eligible for the JobKeeper payments. And earlier you asked about challenges that businesses are facing. One of the challenges is the JobKeeper payments are being paid to businesses in arrears. So for the fortnights starting the 30th of March through to the 30th of April, employers will need to find those $1,500 lots of income to cover the wages for employees that they've brought on under their employment, in order to get the cash back from the government. It gets a little bit more curly after that, because if someone were earning, say, $700 a fortnight, you still need to pay them $1,500 a fortnight. Yeah. And that is, again, before tax, so you still have to cover the PAYG withholding on that, as well as the superannuation. If that person, using the $700 a fortnight example, legally you would only have to pay super on the amount up to $700. The excess over $700 then becomes is no longer subject to super. The JobKeeper payments are taxable to your business, so it makes sense to pay them out. If you don't pay your employees the JobKeeper payments, it then becomes an issue which the tax office and the commissioner will then come down on you hard for.
So critical to pay out your employees, yes, and the JobKeeper.
Exactly.
The full amount, not a part amount, the full amount. Yeah. Because some people may try to skimp and say, well, my employee is only being paid, $1,200, so I'll pay them $1,200, not the $1,500. So that is a no-go.
Exactly. And because it's linked closely with single touch payroll, which is the automation of submitting your pay slips to the tax office as a pay run is processed, and I suppose as you issue your pay slips, the ATO has that data on a regular basis. You need to have done it by the 30th of April in order to, essentially they'll have the information before. And if you're not meeting the requirements, then they don't have to pay you the JobKeeper. So it's in your best interest to just follow the letter of the law. I have had a few instances where if the question has come about whereby someone's trying to work the system or deliberately manipulate it to benefit from it. The rules have been clearly set around that. So if someone is doing that, then they'll be penalized heavily. Not only will you have to repay the money, but there could be some interest and penalty charges applied as well.
Clear. Very good. So follow the law, do
Yes.
it. Let's use the money inside of this new world order the way it's designed. Let's not take advantage of it. Let's be a community and support each other. So as business owners, let's do the right thing for us as a community, for our employees, and for Australia.
No doubt, because at the end of the day, while the stimulus is coming from the government, it's being funded by taxpayer dollars. And at some stage in the future, I think that it's quite certain that we're going to have to repay it, whether that be through some GST instrument or a tax levy or additional taxes. That's not clear yet, but in order to restore the budget to a deficit position, something drastic needs to happen in the future.
Yes.
Whether that be over a span of years, it's not clear yet. So, when looking at applying for these things, seek the right advice, and remember that if you're claiming unfairly, there's someone else who definitely needs the money that may not be able to get it. So on the JobKeeper, if you're trading out of a business which isn't, you don't have employees, for example, a sole trader, a partnership, or a trust where you've got beneficiaries that receive distributions, or if you have a company where the director gets paid a director's fee at the end of the year, those are also businesses that are now eligible. The process for going through and applying and enrolling for the JobKeeper payment is slightly different, and individuals in those businesses are called eligible business participants. Something to remember is that in a partnership, there'll be only one individual that will be eligible to receive the $1,500. So if you have two partners, only one of them can receive it.
It's a big issue.
Yes, it is. Same thing with a trust. If you've got someone in there, you've got multiple beneficiaries, only one of them will be able to receive the JobKeeper payment.
Sure. Great. Thank you very much for sharing a lot about the JobKeeper. I think this is a great, way of supporting employees in a world where, many of us and many of the community are actually going to be struggling. So I think it's a fantastic initiative from the government. Very unique. I don't think anything like this has ever happened before in Australia. So I think it's very, very creative.
Yeah.
And that's what we also want as business owners inside of the New World Order. The government is being creative, and it's also our job to be creative and innovative in our businesses as well. What other initiatives are there that you'd like to share?
There's a few
that make it different,
which are more around, particularly for business, small business owners, tax incentives that have been introduced. I won't expand on these too much because we were talking about cash flow, and the government introduced a measure whereby you'll be able to get an immediate deduction if you bought any assets for your business that were under $150,000. From memory, I don't think I've spoken to anyone that's looking at spending money to bring in assets at this time. Most people are looking at just preserving cash. On the back of that, there's an accelerated depreciation rate for assets that are over $150,000 being acquired. Again,
right.
Not
so
really.
This would be a great opportunity for people who have cash, like who have been hoarding cash, or business owners that have had, cash in the bank. So this could be a great opportunity for them to splurge right now.
So, for example, let's take the stimulus measures, the cash stimulus measures out of the equation. So your JobKeeper and the cash boost. If a business has been making a lot of profit throughout the year, this would be ideal for them because they're essentially reducing their tax payable on the back of that once they lodge their tax return. Again, not many businesses will be looking at this, but it is available in case anyone does need to make an urgent purchase at some point before the 30th of June.
Yes, great.
The tax payment deferrals is another one which I think is important. The deferrals include things like essentially any tax liability can be an FBT liability, so fringe benefits tax, income tax, GST, income tax installments, I think and PAYG withholding on your employees' wages. So those are the type of tax liabilities that exist. You can actually request for a deferral of up to 4 months for payment of those liabilities. That'll have to go through the tax office. Again, your tax agent or BAS agent or your accountant will be able to put that in place for you.
Fantastic.
With that as well, in terms of, I suppose this one speaks directly to cash flow. If you're on a quarterly BAS lodgement cycle, that means that every 3 months you've then got to lodge your activity statement. You then have to pay for the GST collected is compared against your GST paid. The difference, if your GST collected is higher, you then have to pay back to the tax office. If your GST paid is higher, they then have to give you a refund. Anyway, if you're in the former situation where you're having to pay GST back to the tax office, you can actually request to have your GST reporting cycle changed from quarterly to monthly. That essentially means that instead of paying $50,000 in GST at the end of 3 months, you're splitting that $50,000 across a period of 3 months. Obviously, assuming that your revenue is uniform across each of those months. From an income tax installment point of view, if you're foreseeing that your revenue at the end of the year is likely to be lower than last year, you can actually apply to have your income tax installment varied downward. So let's say, for example, when you lodge your 2019 tax return, your tax liability was $10,000. That would have meant you'd have $2,500 to pay in each quarter for the 2020 financial year. If you expect your turnover to be down, say 50% of that, your tax liability has now gone down to $5,000 essentially. What you can do is apply to have the automatic installment amount that comes through on your quarterly activity statement from the tax office. You can get that varied down to something that's within more reason, in line with your expected turnover. If you need to, there is the ability to go back and amend previous quarters as well. Previously, you weren't able to do that. You'd have to do it in your current BAS and request a refund more. So there is a bit of leniency there. Again, you do get some remittance of interest charges on existing tax debts that you may have. And if you do have an existing tax debt, what you can do is request for a low interest payment plan to be put in place. So if you've got a tax liability of $10,000, you can request up to 12 or 18 months to pay that debt off within.
Great. You've given us so many nuggets, and unfortunately, this is all the time we have. And you've given us some important information, for example, being able to get credits through our BAS, applying for JobKeeper and the entitlements for that, being able to defer payments by negotiating with the tax office in different areas, income tax, GST, and amending of your BAS statements as well. So all of this, has been very useful. And I know that you could go on and on and on. And I can see that, as a business owner for myself, it's like, wow, you've got a wealth of information. I'm not going to remember all of this, in particularly the last part. I was like, oh, this is so good, but I'm not going to remember this. And I think it's critical, like in this new world order, with all the availability of being able to restructure your finances, it's important to talk to advisor like yourself. So how can people get in communication with you if they wish to work with you and get more information, or they want to be helped out to access these grants? What's the best way?
They can reach out directly. They can ring me on 1300 507 665. You can email me on Rakesh, so that's RAKESH at Daxcel, DAXCEL.com.au, or you can reach out to me on LinkedIn, just Rakesh Nairn. Pretty easy to find.
Fantastic. And we'll also have all that information inside of all the social media handles as well, so people can easily reach out to you. That's been fantastic. So, Rakesh, I just really appreciate your time, your energy inside of this new world order to really educate us to access, all these grants that are available for us as business owners, which then flow on to our employees and then to families and children. It's just really awesome that you've put in a lot of work. You and your company have done that for us to be empowered. So thank you so much.
I'm happy to help wherever I can. If I can leave you with a parting thought, it's something a colleague shared with me, is that this is an important time to get things right. So if you're not sure about whether you can access any of these stimulus measures, by all means, reach out either to your accountant or contact me. I can do a 15-minute free consultation, and we can just discuss your situation, and I'll point you in the right direction. It's not the time to be holding off on reaching out for help that's available.
Very, very important. That's why we're doing this business summit. It's all about community, connection, reaching out, providing information so that, we get through this together. We will get through this, and we'll get through this stronger if we communicate and support each other. Very, very great.
Agree.
Awesome. Thank you again, Rakesh.
Not a problem.
For everybody listening to this business summit, thank you for your generous listening. My team and I are there for you as you navigate through these unprecedented times. If you are interested in having a conversation with me, feel free to email me at connect@rugaregomo.com. Thank you very much.